everybody, and you're welcome once more to our EIT webinar for the month of October. It's so amazing to be here today. And before we start, I want to apologize for starting late. We had a bit of technical issues. That's why there was a delay in starting today's program. Before we start, kindly share the link. I will live on across all our platforms. Kindly share the link to your friends and to your loved ones to join in on the conversation. We'll have an expert in the industry who is going to be taking us in today's topic. But before I start, I also like to introduce my co-host for today, the person of Mr. Tosin. I'm Antonia Nyawu, the Programs Officer for Eco Innovation Center and Eco Institute of Technology. I have my co-host today, Mr. Tosin, who is Head of Programs. I'm going to be giving him the floor to kind of introduce himself to us and also to give us a bit of his expectation for today's program in a bit. We're going to be talking about the act of tech entrepreneurship, navigating challenges and achieving success. So, Mr. Tosin, over to you. Just give us a brief introduction. I know we've been doing this for a couple of time now, but for those that would be joining us today and for those who will be viewing the webinar on a later occasion, so if you can just introduce yourself and also give us like your expectations for today's webinar.
All right. Good evening, everyone. Good evening, Antonia. Thank you for that wonderful introduction. Good evening, Mr. Ayodeji Ajuwon. It's so nice to have you with us at this October EIT webinar. And just like my co-host has mentioned, that we'll be looking at the topic of how we can navigate success and the challenges, because we understand that for every startup and entrepreneur, the journey is a continuous and evolving one that we actually see to different kind of challenges, different opportunities. And while even these opportunities comes up, there is a need for us to strategize to see how best we can actually shoot at all of these opportunities. So for today's topic, it is the art of navigating through challenges. And one major core or one thing that I'll be looking forward to is to see how the audience, our audience, even myself, and every
Hello.
is actually
We lost you.
Yes, I can is actually to see how, all right, is actually to see how success and challenges can actually be dealt with even as an entrepreneur or startup industry. So with this, I am so sure that even our audience are looking for what Mr. Ajuwon will be taking us through this evening. Thank you very much, Antonia.
Thank you, Tosin. Thank you for your sharing your insights for what you hope to attain for at today's webinar. So without further ado, I'm going to be introducing our guest speaker for today, Mr. Ayodeji Ajuwon, who is co-founder, also head of product and business operations at Steward Inc, and also is also the co-managing partner at Land Republic. So I'm going to be giving the floor over to him. He's going to be taking us through, he's going to be sharing insights from his personal success stories and also help us to know how to overcome some of these hurdles, because there are always going to be problems in the tech entrepreneurial space. but he's going to give us some insight on how to navigate through these hurdles and come out successful. So I'm going to be giving the floor to Mr. Ayodeji now. He's going to be introducing himself to us some more, and then he would just kick the ball rolling from there. Over to you, Mr. Ayodeji. Thank you very much.
Thank you very much. I don't know if you can hear me. Can you hear me?
Yes, I can hear you.
Okay, great. Good evening, everyone. Just like she said, okay, let me see. Can I share my screen?
Yes, you can. Yes, you can.
Okay. Share. Okay. Yeah, good evening, everyone. Just like she said, my name is Ayodeji Ajuwon. I'm the co-founder at Steward. I lead products and I also lead business operations at Steward. Steward is a financial service company or a fintech company based in Uganda currently. We should be launching in Nigeria December this year, but originally our market was Uganda. I'm also a co-managing partner at Land Republic. Land Republic is a real estate company based out of Lagos, Nigeria. So the topic came to me, and what I had was the art of entrepreneurship, navigating challenges, and achieving success. And to be very honest, at first I was like, oh, what do I do? Do I go into trying personal story? So I don't even think I need any preparation for it, right? Because I'm basically sharing insights about what I experienced on a day-to-day, what I've experienced in the past, and what I'm still doing. And I think basically what I did was I just put together a couple of notes and I sent to my designer and said, you know what, just come up with a slide with these notes that that I sent to you, because I think that the major part of the learnings are actually going to be from some of the insights that I'm going to share personally, not necessarily what I put on a slide, for people to learn. There's this saying that Winston Churchill says, it says, success is not final, failure is not fatal. It is the courage to continue that counts. Now, if we go back to the topic, it says the art of tech entrepreneurship. So basically, it means, right? How do you navigate that? How do you navigate bridges? How do you navigate, building an entity in the tech space? Then I went to the objective of the webinar, and it's basically to empower, tech entrepreneurs on the know-how, resources, skills to sail, the challenges and all stuff like that. Yeah, so first off, I'm just going to, read you guys some data that I pulled off online just for you guys to see that, entrepreneurship it's a mixture of success and failure. And to be very honest, sometimes you actually have to have, a taste of both to be able to build something that is really solid. Now, let's look at success rates first. You can see founders of previously successful business have 30% of success with their next venture. So basically, it means that people who have founded maybe a business before, or people who have founded a business that have either failed or succeeded before, have 30% chance that their next venture would actually be quite successful. About 1% of startups evolve to become unicorns. I believe we all know what a unicorn is. A unicorn is a startup that has a valuation of $1 billion. That's what a unicorn is. So the likes of Uber, Airbnb, Slack, Stripe, and all sorts like that. Just 1% of startups get there. So it means that as much as, a lot of people talk about building unicorns as a startup, most of what you're going to have, are startups are, generating maybe millions of dollars or thousands of dollars in revenue and are sustainable. Not necessarily all startups will become unicorns. So that's one thing I want, everyone to also put at the back of their mind. I'm just going to move to this failure rate, and it says 1 in 5 startups fail in the first 5 years. Most startups fail because they run out of money. 90% of startups fail, right? And another one says that the number 1 reason why startups fail is due to misreading market demands. This is found in 42% of the cases. So I'm going to be giving, very insightful explanation to some of these things, what I've experienced, right? I'm going to be going back and forth, on some of those slides, right? So if we want to talk generally about entrepreneurship as in startups, in tech startups specifically, we also need to be able to talk about co-founder relationships. We need to be able to talk about the evolution. We need to talk about how you build products, regulatory hurdles. We need to talk about the capital constraints, right? Sorry, I'm just going to roll to So first of all, for you to even think about building a business in the tech space, you need to be able to roll out the products, so to say. And then one thing I usually tell people is that before you decide to go, build out an idea, you need to actually seek or find the exact problem that you're trying to solve. One of the issues that we have with a lot of tech entrepreneurs today is that we just want to build a product. Everybody's building a fintech or everybody's building a send money app, and we just want to build a send money app. And that's literally the beginning of where our problems usually start. You need to actually find a problem for you to solve. You're not building a startup because everybody's building or because you also want to build something. You need to address a particular audience. That is why today you see some startups that will tell you that they are focused on women. And that's because they found a market there and they've decided to solve a problem around maybe finance for women, savings for women, giving women capital for businesses. That's because they found a market there, which is something that as entrepreneurs we all need to be able to pay attention to. It is the problem first before the solution. You don't build a platform without knowing your problem and knowing if you're actually solving it for the right market, and if your market is also going to be able to pay you for that problem, right? One of the things I usually tell people about is you need to be able to build an MVP for whatever you're trying to solve. And the first step to even building an MVP for me, I'm a very big fan of testing things manually, right? I don't know if you can hear me properly. Is there any obstruction? Can you hear me properly?
No, I can hear you. I'm hearing you clearly.
Okay, great. I usually tell people that before you build a product, you need to test out your ideas manually, right? I'm going to give you a basic instance of some of the things that I do when I want to test out an idea manually. We started building Steward last year. That was August last year. I was formerly head of product at Alpas. Alpas is also a fintech company based out of Lagos. Expanding. I think that's expanded to across the country, providing financial services too. And then, what did I do? With my co-founder when we wanted to start, Steward. The problem we discovered was that we discovered that a lot of educational institutions, especially private educational institutions, were dying off. Right? There was no funding. There was no money. Private schools just sustained by, okay, we collect school fees today, and then we just try to push, and then we find loans, and we just do a lot of things, and then we shall try to get things done. And there's no growth for them, right? It's just an unending circle of we're just trying to push. Schools die. If they build today, they don't even have money to innovate because their schools die out over time. And so the vision of the product of the company was we want to make educational institutions financially resilient for generations. So the first idea we actually put out to do was, okay, now we looked into the model of Harvard, Stanford, and other universities, and we saw that these guys had what we call an endowment fund, meaning alumni and people who love the schools and all sorts like that over time come together to put up a fund, right, that the school utilizes to run its operations. And then we said, okay, why can't we replicate that model in Africa? Because as I said, our initial market was Uganda. We're trying to build a Pan-African product. And then we said, okay, I think we can try something similar. The problem is to find, funding for schools and help schools become financially resilient. So let's try the Harvard and the Stanford model, and let's build an alumni relationship management platform that we can use to help those schools raise funds, right, from their alumni, and then we could use that fund to power the school. And what do we do? Now, instead of running directly to building that product, which is what most people do, we did not build that product initially. What we did was we manually tested, create a Google form, create a payment link, and say, okay, we are representing this school, we've onboarded this school, let's try to get some donations. Test your ideas manually first, because by the time you spend 3 months or 4 months building your products, sometimes, that's literally the beginning of failure for most startups, because we rush into building a platform. We spend millions of naira, right, building a platform. And after you build the platform, you discover that your users don't even want that solution, right? So we wanted to know the actual problem. And then we tested that idea, but that wasn't working. We discovered that in Africa, there was a disconnect between the alumni in Africa and the school itself. Schools, alumni don't even rate their schools in Africa. If you come to an alumni and you say, oh, we want to raise funds for your school. You know, the person's probably like, this school, no, they did me, you know, so many things back then. I'm not giving you guys any money, right? And then we discovered that the relationship between alumni in Africa and their schools, there's a disconnect, you know, as opposed to the likes of Harvard, Stanford, where there's even a community after school, you know, and those people keep helping themselves for years. So we couldn't do that. And now imagine a situation where we had built that product already, right? We have started, we've built the platform, we've done everything, and then that happened. It means that everything comes down back to zero, right? And we'll probably have wasted a lot of money building the platform. So what did we do? We decided to take a pivot. Now the vision or the mission is to actually make schools financially resilient. However way we get to find that, you know, product market fit, it doesn't matter. What matters is that vision, we stay, you know, close to that vision of making schools financially resilient. So what did we do? We decided to speak to our users. We decided to speak to our customers, which is something that I want that, you know, every single person who is, you know, going to be involved in tech entrepreneurship to actually, you know, try to grow an habit of, which is speaking to your customers. And what did we do? I think that was around December last year. Schools were already closing. And then when we discovered that was not working, you know, me and my co-founder spoke and we said, you know what, we're going to drive to almost every school in Lagos that we can find. And we're walking into the school and we say, we want to speak to the principal, we want to speak to, you know, the directors of the school, and we want to know actually what your problem is and if we can help you solve that problem. And so we started working into schools. We drove to, you know, hundreds of schools in Lagos, just the two of us. We did not even say delegate that to any staff and say, oh, go and do this by yourself, go and get information, because we needed to understand what we're building firsthand. I went, you know, to validate our idea by knowing if we are solving the exact problem for the market. And we discovered two major issues for schools. The first one we discovered was that schools lacked funding. There was no money. The circles at which parents paid was not consistent. Some would pay, some would get maybe a 70% collection rate after, you know, payments and all sorts like that. So first off, they did not have funding. The second problem was that because they did not have funding, schools did not even understand expense management. Because when the money finally comes in, they immediately spend it on the things that they need. So they lacked expense management. And then we said, okay, now we see the first problem, which is lack of funding. We tried getting these funds through alumni, but we're not able to get it. So what's the best way to do this? And then we thought, why can't we get the funding ourselves and then give to these schools? And the only way we do this sort of Hello, can you hear me now? It seems I dropped off.
Yeah, we experienced a little bit technical issue, but we can hear you clearly now.
Okay, so if I may ask, what was the last thing you heard me say?
We're talking about the
Yeah, so you talked about how you drove to a school, how you moved into a school to actually ask them what their problem is. So you can go on, Mr. Ayodeji.
Exactly. So we're trying to validate those ideas, right? And so it just boils down to understanding what our customers needed. And that was when we came up with building a credit product, because we saw that the only way we could get funding for schools was to raise funds ourselves from DFIs and banks, right? Other financial institutions and, you know, all sorts like that. And we decided to build a credit product for schools. Now, another problem schools had was that schools did not have collateral, right? Which was the major thing when, a financial, if you go to a bank, for example, today and say, as a business, and you say you want a loan, they'll ask you for a collateral. And then we also have to find a way around that and said, okay, now it means that the only possible collateral that most schools have is the building that they are sitting on. That is even if the building is not even being rented. So it means that we have to provide uncollateralized loans for schools, right? And then we decided, okay, what can we use as collateral? And that was when we decided to build a payment system for schools. And we said, you know what? The payment system that we're building is what is going to work as the collateral. So it means that as a school, we need to be seeing your revenue. We need to be the ones collecting the fees for you. It must go through our platform. And that way we are having security. So basically, I'm just trying to explain how, you go about building an MVP and, prototype for what you want to, build out as a tech entrepreneur. And then from there, we moved on to saying, okay, now that we found this, let's launch. Now, we did not just launch by, also building a tech product immediately. What we decided to do was that let's get a few customers and experiment. And then we can start building the products slowly on the side. Hello, can you hear me?
Yes, we can hear you, Mr. Ayodeji. Okay. You're talking about the products by the side.
Yeah. So, and then you can build the product by the side. And so we launched out by working to schools manually and saying, you know what, we'll manage your finance, we'll give you funds, we'll do this, we'll do that for you. And then we literally managed a couple of schools on an Excel sheet. That was how we launched. Not necessarily building a tech product, because one of the things that I also usually encourage a lot of tech entrepreneurs to do is that you need to take that move. Execution is very important. So it does not necessarily matter that you have to come up with a tech product first. Is your idea something that you can manually? As when you don't scratch, you need to be able to do things that don't scale at first. Product using Excel. And then we were, writing scripts on Excel to automate some things, build a credit model and all sorts like that as we're trying to build the MVP, right? So basically, all these explanations is just talking about how you need to validate, your ideas, how you need to work on them, feedback loops, iterative development. And, some of the things we also learned was that as we're, building for these people, for our market, the back and forth was something that enabled us to understand who we were serving, who our product, who were using our product. Our product users were school directors, school bosses, the accountants, school stakeholders. And so some of the things that also informed us on even user experience, user interface was that these people are older people and are less tech savvy. And literally we had to simplify UIs. We had to use less icons on our application. We had to write out words. I'll give an example. You see an application where you're building and then, it's fine for you to build, something that is aesthetically pleasing, which is good. I'm not saying you should, not look into that, but you also need to know your audience. I'll give an example. If you see an export button today, people could literally just use an icon to signify an export button. But what we literally did was that these people are less tech savvy. So instead of using an icon for an export button, we would rather write export there. Or if you see a filter, rather than use an icon for a filter, we'll put a button and we'll say, filter, right? And so understanding your audience is very important. Alpha testing and beta testing. Put the product, when you build the product, you necessarily don't have to launch it out to all your users. Put it in the hands of few users, let them test it, let them interact with it, let them give you feedback on your product, and understand how you're going to move. You might not be a technical person, you might not be a developer, but you need to be hands-on on your product. You need to speak to customers as much as you can, every single time. Sorry, just want to take a drink. Right? You need to be able to get feedback from us and all sorts like that. On building an effective team, very important that, hello?
Yes, can hear you, Mr. Ayodeji. You're saying building an important team, yes.
Yeah, on building an effective team, it is also very important for you. I think there's one trend that I've noticed, that I believe everyone is also aware of in the tech ecosystem, which is the fact that it is very hard for you to find a tech company that does not have a co-founder. Most times, it is very rare for you to see just one person. And even some startup accelerators like Y Combinator, Techstars, they always, love when people come together to build products because you cannot have it all. So it is very important for you to find someone that, is stronger at some things that you're not. And that's why sometimes you see there's a CEO role, there's a COO role, there's a CTO role, and there's a technical co-founder, there's a non-technical co-founder. Someone is focused on fundraising, someone is focused on operations. Co-founder, it means that we need to find someone that will do more of operations and fundraising, and all stuff like that. So, there has to be, diversity in the skills, but also they have to balance each other. I think employee equity, stock options is always good that when you bring people on board at the initial stage, you give them that ownership mentality, right? And one of the reasons why this is good is also because people like to, put energy into something that they feel that they are a part of, right? So I usually advise when you build, it is necessary for you to give back to people so that they can also give you as much as they can. People would offer their best, service to you when they feel that they have ownership, of what they're building, right? So I'm going to go back to a couple of things. I'm just going to talk about the tech landscape currently in Nigeria. So as I said, Nigeria is probably one of the most vibrant, tech ecosystems in Africa, and the major parts where we have development is in Lagos and places like Abuja. Some of the dominant players, we all know them: Flutterwave, Andela, InterSwitch, Paga, Jumia. Imagine the disruptors. We have the likes of Kuda, Piggyvest, Paysac, Ilium Health, Tribe Greek, and all stuff like that, right? And it is also important for you also to understand, the journeys of these different people, how they've grown, connect to people who are probably in those, systems, or probably the founders themselves, to also learn from them, right? And one of the things that I've done over the years is network, which I think that should also be a big deal for you if you're in, the tech ecosystem or trying to be an entrepreneur or trying to navigate. Is that networking? You can never emphasize the importance of networking. At least, for some of these, players that I've listed, at least up to 5-6 people, I'm very connected with them. And from time to time, I try to, even though, most of them are usually quite busy, right? I try to share, things that I'm experiencing, ask for, way forward. And also having those relationships is also going to help you climb up the ladder faster. One thing you need to understand about the tech ecosystem is that there's a form of cabal that's been created out of it. So for you to be able to benefit from the ecosystem, you also need to network properly. You need to attend events, you need to speak to people, you need to connect to people that are necessary, and you need to make friends with people. You need to build genuine relationships. Right? Sorry. Yeah. So I was talking about the network effect. Exponential growth mechanism. It is very important. So now let me give you another, instance to which where, building your network is going to be very effective. One of the things that I tell people about building networks is that even in the fundraising circle, right? The fastest people that actually raise funds are not the people that build the best products, but they consist of two types of people. People that have, have track records, because one of the things that you need to understand about people investing in your products is that people don't necessarily invest in your idea, right? People invest in the people behind the idea. So if you're a solid person, you've worked in great companies, or you've had a track record, right? This network that you've built would help you ease the journey of tech entrepreneurship, and you can also learn from the success and failures of some of these founders, right? In the fundraising circle, most times, even you could literally apply to some accelerators, you could apply to some, capital funds for quite some time, and you see that these people don't give you a response. And just because one person who is in your network just introduces you, maybe an email introduction saying, "Oh, this is Ayodeji, he's building Steward. I'd really like you to speak to him. That could literally get you to the audience that you need to be able to raise funds to actually build your startups. And then I'm just going to, give a brief explanation around fundraising. Some of the things that we also do not hold in high esteem as tech entrepreneurs is that we are so engrossed in building our product that we are not building the business behind the product, right? Oh, I'm building an application, it's send money, receive money. What value proposition apart from sending money and receiving money are you providing? Or is it that your app is aesthetically pleasing? That is what you're trying to sell, right? You need to understand the business around what you're building. Today in Nigeria, one of the reasons why I've been talking about finance a lot is because in Nigeria, the largest ecosystem in tech is actually the finance ecosystem, which is fintechs, right? In Nigeria today, we have over 300 fintech companies. Now, the honest truth is that over 60 to 70% of them are going to die over the next few years, right? And that's like very important for us to know. So it means that we need to become big players in, sorry, what is this movement? Sorry, just give me a minute. Yes. So over the next couple of years, about 60, 70% of these startups are going to die. And why are startups going to die? That's also, like I said, there are two major things. Some people would play the monopoly game. The people that understand the game will play the monopoly game, right? And it is very natural for every startup to try to play the monopoly game. You want to move forward as a startup. I remember seeing on Twitter a few days ago, someone was saying Flutterwave is becoming the Google of Nigerian fintech space. Because by the time you're trying to launch a startup, you discover that Flutterwave has launched your startup as a product. and then your startup dies from there because, of course, I would definitely use Flutterwave before I try to use you. And so those are some of the people that are going to win. You need to be able to play the monopoly game and you need to understand the business behind your product. Why are you solving that? Why are you trying to build a product? What solution are you trying to solve for? I'll give a tech company is focused on financial service for private schools. I did not say schools in general. We carved out a niche. Only private schools. We don't go to government schools. We don't fund government schools because we already know they have funding, or even that very the deterioration in their infrastructure. It is very difficult hacking into their system to say, okay, let's get you on board. You have to go through so much documentation, so much people, so much access. And then we say we are a financial service provider for private schools across Africa. We carved out a niche, and that is what we're focusing on, and that is the market we are building for, right? We are trying to understand the business. We try to put more energy into building the business behind the product. And if we look at it in 2023, there's a downturn in funding in the ecosystem, right? So today, it means you're not generating traction, you're definitely going to die, right? It is very important that I think one thing that is very, very evident in the whole startup ecosystem is that we've all discovered that today we have to go back to the traditional method of entrepreneurship, which is you must make revenue. If you don't make revenue, you die. If you don't make revenue, if you don't show me traction, I would not invest as an investor. And that's one of the things that I admire about traditional entrepreneurship, which a lot of us keep, is the fact that as much as the other North Star metric that the company is focused on, they build business first, right? And by building business, some of the things they also make sure is happening is that they build revenue. No matter what, that business must generate revenues, right? Which is something, that as a tech entrepreneur, we also need to be focused on. It's not all about building a aesthetically pleasing product. I don't want to mention names, but I can mention up to 5 startups that are generating millions of dollars in revenue. As a product person, when I see their product, I'm like, no, this is pathetic. But one thing they've done is that they've built functionality and they've built the business revenue from it. So even though that is my perspective about their product, that I don't like how it looks like, it does not dispute the fact that they are making revenue. It does not dispute the fact that they've built a business around it. It does not dispute the fact that their product is working. right? My thoughts about, oh, it's not fine. Oh, the product is not doing this. Oh, this button is not flying everywhere. It doesn't count. The most important thing is that they're a business and they're, and then if they approach investors will definitely invest. And 2023 is harder to raise funds. I'm going to with you. If you had built a startup in like 2020, 2019, 2021, you to get funding, you had to build traction. So I think we wanted to raise a pre-seed round of about $600,000. We stopped at $430,000. But I could tell you that it took double the energy for us to raise that fund, because we had to prove that we could actually build this product. And I would be very honest with you that a lot of investors don't invest, like I said, the product. Some of them have not even downloaded our app, or they don't even know how it functions. Some of them just know that, okay, this invest in the people behind the product, right? You know, their track record and all sorts like that. Sorry, I'm trying to also look at time. Scalability, reduce overhead. As much as you can, you have to be a master, a jack of all trades, master of none. That's what I call myself. I'm a jack of all trades. Before we even raised funding, at the start of the startup, I was the financial accountant. Yes, I did accounting. I was the products person. I was the QA tester. I was the operations person. I'm picking up multiple roles. So it means that as a tech entrepreneur, you're not necessarily focused on, as much as you want to say, oh, I'm an head of product. You know, everybody sees that. You need to be able to assume different roles that your startup. The most important thing, you know, what I tell people about building, tech entrepreneurship is that do whatever it takes to make it work. When Steward started, I've been in payments most of my life, right? But we got into credit. So before we got a credit person on board, I had to become a credit person. I had to go take finance courses. I had to speak to credit people to understand how credit works. Steward was the first time I personally built a credit model, a credit worthiness model. I'd never built that in my life. And I've been doing products for years, right? I've been doing payments for years. I've never built that in my life. But because we needed that, I had to become that. So you need to be able to evolve as a tech entrepreneur to fit into any role. And you also need to learn the lean startup methodology, which is one of the problems that kills a lot of startups today. You're 2-3 months into business. What's happening? So, and because, like we said, it's tech entrepreneurship, you're trying to digitalize processes. The first thing that you should digitalize is the fact that you need to reduce your overhead. You need to reduce the number of people on your team. You need to it means that if I'm building a digital bank today, a traditional bank or a commercial bank, could have 600 to 1,000 staffs. It is my duty that I should make sure that my team is not more than 30 or 20, because my processes are digitalized. So why should I be competing or having as much staffs? Because, some startups pride themselves in saying, oh, I have 50 staffs. We are running. It's not an achievement, I'm sorry to say. So you need to run the lean startup methodology. The of startups is hiring talents. That's the fastest killer. You run out of money, and if you run out of money, you're dead. The fastest killer of a startup is not that you're not doing something awesome or you're not building innovation, is that you're burning so much money. And if you burn so much money and you don't have any money again, you're dead, right? And so I usually tell people that, use the lean startup methodology, try to be as economical as much as you can. If there are some roles, if you need to employ somebody, you need to be able to make sure that person can assume several roles. And some people can say this is pressure, this is this, this is that. That's the startup life for you. If you decide to come into a startup, you choose to do it. You're not being forced to do it. So you need to be able to assume those roles. I need to be able to assume that. If you know that maybe you don't want that, then you could find a bigger startup too. Unfortunately for us, majority of the companies in Nigeria, tech companies, they are all startups, regardless of the number of years. Flutter is a startup. PaySac is a startup. Mention the best tech companies, the ones that I can say that have gone out of the startup, is InterSwitch of age, right? and all like that. So let me see. Okay. I think I've talked about building an effective team. I'm going to talk about, okay, challenges, capital constraints. I think I've talked about all of this in entirety, right? Fundraising, you need to build traction. Today, if you don't show traction, nobody's going to invest in you. They need traction for you to, you need traction to get funded. And if possible, if your product is actually very good enough, your product can be a product that will generate revenue and would not need funding. Another thing that I need to tell people not to think of as an achievement is fundraising. Today, we gauge startups by fundraising. You say, oh, this startup has raised $5 million, but this startup that raised $1 million, then this startup that raised $5 million is bigger than the startup that raised $1 million. It doesn't work that way, right? In short, when the more startups raise funds, the more equity they lose as a company. That's what a lot of people do not get. Even raising much funds at pre-seed level, let's say at a pre-seed level, someone is raising as high as maybe $5 million, they've lost a large percentage of the company. We clap for those kind of people, but we've not seen the results yet. So fundraising is not a trophy, right? Revenue generation is the trophy. What is your profit ratio? Profit to revenue ratio. Those are what are actually trophies. You see some companies. One company I'm going to cite that I respect a lot. I did a research on them, some time ago. Strive Agreed. I don't know if people have heard of Strive Agreed. Strive Agreed has raised a total of around $65 million. But out of that $65 million, I think the only equity fund, I believe we understand the difference between equity and debt fund. Debt fund is money you collect to run operations and you return. Equity is the ones that most people raise today that we talk about, because as they raise that fund, it's eating into their shares, their equity as a company. That's what most people raise. Strive Agreed has only raised, I think, about $500 to $1 million in equity fund, and I've raised over $65 million in debt fund. So it means that the founders still have a large percentage of the company to themselves. And why are they able to raise with this model? It means that they've been able to consistently show results, build traction, right? And show that they can become a profitable company without needing so much fund. A startup could literally require $50 million, right? And another startup requires just $5 million. And that startup raised revenue than a startup that has actually raised about $50 million. All those fundraising is usually to power operations. It does not mean that the startup is profitable. So profitability is something that every single day. Are you building? Don't build anything fancy, right? Only the things that are required at an early stage. I'm very honest about tech entrepreneurship space. It's a headache. I read on Twitter one time, I've forgotten his name. He's a very well-known tech person, renowned person in the ecosystem. He said something. He said people that actually build startups that get to unicorn level of, startups that have raised millions, 2-3 digits millions of dollars. There are people that right? They are tolerant to pain, because building a startup is stressful. So you need to actually understand the intricacies of these things. I'll give you an example. For someone like me today, I would never build a startup that has to do with a payment link. If it's a fintech. Now, the question is, why am I saying I don't want to build? I'd rather focus on other products, maybe a POS product, right? Provide POS service, but I will not build a payment link. Because if someone comes to me to come and buy something today, the first thing the person is asking is, please send me your, right? The person, if I send the person payment link, it's stressful because the person has to click. Okay, you click on the payment link, you open then you click on right, and the person credits me. I'm not saying that this product is not something that is, very good. I'm saying that it is a nice to have, not a must have. So at early stage, you need to focus on the products that are going to generate revenue for you. Not a product that is going to say, oh, you guys are building nice stuffs. When I started, Steward, one of the things I discussed with my co-founders was I told them, I said, at least for the next 3 years, we're not going to be launching more than 2, 3 products a year, product line. We launched loans and we launched payments, school fees collection system. We just launched a third product, which is income advance. Now, why did we launch income advance? The reason why we launched income advance, I'm going to round up. Why we launched income advance was because we noticed that schools were coming back for loans. Right? So what we are trying to solve a problem for them, but they keep coming back to collect more. So how can we solve that problem for them? What we decided to do was that why not give them the entire capital that they need for the entire term? And then they return that money back over time. So that's just a summary of all of that. I want to quickly run to the Q&A session. Success antidotes, I just put some of these things for you guys to actually go and try to read some of the stories of these people. Steve Jobs, I was able to turn Apple around, Elon Musk and his multiple ventures, Jeff Bezos, and the growth of Amazon. Amazon has some very, very key ethics that we all need to research on. I don't know if you have any questions. Let me just go through the slide if I've touched everything. I think I've touched everything. Yeah. I don't know if we want to questions now. So yeah.
Amazing. Thank you so much, Mr. Ayodeji. It was so extensive. Like, I was trying to put down everything you were saying. I can't help but notice that I was putting my hands together for you, but you thought it was time up. Anyway, thank you so much. I like the way you took the flow of the discussion. You spoke about the importance of team building, but you also laid emphasis that in as much as we're working on trying to build our team, we must also remember that in your words, you said overemploying or employment is not a goal. It's not something you get a trophy for. It was very funny. So thank you so much. I'm sure Mr. Tosin also has like some questions he would want to ask you. You touched them. It was like you saw you saw our board and some of the questions we thought our viewers are going to, that would be very meaningful to our viewers, and you answered every one of those questions. Because of time, I would just give Mr. Tosin like 2 minutes to like give his input, and then we'll hear a word from you, and then that will be it for today's webinar. So Mr. Tosin, over to you, sir.
All right, Antonia, thank you very much. Mr. Ayodeji, I'm so glad being a part of this session today. I love that. One thing I love about this session is the fact that it was very, very experiential. You are not just coming to tell us theory. You were able to actually pick the right point to talk about what is necessary for startup to do. And one of those part of it was the fact that even you yourself, on the course of your startup journey, you are not even tired of learning new things. You want to be the one in charge of operations. You want to learn new things. Because I noticed that these days we have different startups that are folding up. I just hear somebody paying themselves $600,000 probably per annum or so. And this is part of the investors' money that they are using to actually take care of themselves. And I'm so glad that you're able to actually discuss all of these things to tell us it's an eye-opener for us and even for our audience. And so this is the question I am asking. And it is actually a personal question from what you have said. When you mentioned that a time will come where people will notice that even the product or even the idea that you are bringing to the table are being executed already. And you made mention of the monopoly that might probably happen in the nearest future. And you also cite the issue of Flutterwave. For us to actually scale through these challenges, which I know that it's possible, it's very, very possible. I have to think back and see that you are really saying what is right. It is true. So what do you think that the startup, the individuals that are coming up, what can they do? Because it is very, very likely that we experience the monopoly of the startup industry. You are bringing a product and you just notice that one startup has actually launched what you are doing. And people want to align with that startup that has been in existence because they can trust them They know they have been in the game for long. So what is your advice? What do you think we can do? Thank you very much.
Okay, great question. Great question. So I'm just going to cite a few. First of all, when I wanted to build Steward, I think the first thing I told my co-founder is anything that is general payment, I'm not doing because they're too much in the space already, right? I wanted us to find a market. Your market is very important, regardless of what you do. The interesting thing is that you might actually be doing the same send money, receive money as someone else, but the market that you're serving is different. For example, we say financial services for private schools. There are credit products outside. Yes or no? Yes. In this financial service that we're doing, they will send money and they will receive money. Yes. We'll give them bank account. Yes. Right? The same things that are being done in general fintech platforms. But the difference is that we decided to find a market. We decided to find the audience, the user persona of who we are trying to solve that problem for. So I think one of the things that needs to evolve is understanding that we all need to solve a solution for a market, right? And if we can figure that out, especially knowing the intricacies of what your market needs, you're going to be able to build something differently. It might literally be the same product. We all build the same thing. The difference is the messaging and the market, right? So if you're able to find your market and most importantly, build customer relationships, which is something that a lot of startups don't do, right? The biggest thing that you can have is loyal customers, right? If you can build, your customer relationship, even if a very large startup decides to launch your product today, right? Your product is still going to be relevant and you're still going to move and you're still going to grow. So market opportunity, messaging, those are two ways you can use to actually go through all of that. Yeah. Thank you.
Thank you so much, Mr. Ayodeji, for your input. I feel there's still so much to learn from you, and we might have to invite you again for another session, but that's all we can take for this edition of our EIT webinar for the month of October. Everybody remember Mr. Deji said, in as much as we're trying to solve the challenges of the market, which is always going to be there, we should always remember that the main purpose of our business is to make revenues, to make profits. So thank you so much, Mr. Ayodeji, for gracing today's webinar and for sharing from your wealth of knowledge. We look forward to hosting you again in our future webinars. Thank you for all the amazing people that joined in today, and for those who are also going to go back and look at our streams. Thank you. That's it. Well, thank you, Mr. Tosin. Thank you, Madam Bola Tito. Thank you, everybody. That's it for today. Seeing you next time. Thank you. Thank you. Have a wonderful, wonderful day. Thank you.